Ladies and gentlemen, good day and welcome to Kaynes Technology Limited Q1 FY25 conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aniruddha Joshi from ICICI Securities. Thank you, and over to you, sir.
Yeah, thanks, Aditya. On behalf of ICICI Securities, we welcome you all to Q1 FY25 results conference call of Kaynes Technology India. We have with us senior management represented by Mr. Ramesh Kannan, founder and managing director, Mrs. Savitha Ramesh, chairperson, Mr. Jairam Sampath, full-time director and chief financial officer, and Mr. Rajesh Sharma, Chief Executive Officer. Now I hand over the call to Mr. Ramesh Kannan for his initial comments on the quarterly performance. Then Mr. Jairam Sampath will take over, and then we will open the floor for question and answer session. Thanks, and over to you, sir.
Good morning, everyone. On behalf of Kaynes Technology team, I would like to welcome everyone to the earnings call for Q1 2025. I have along with me Savitha Ramesh, chairperson of our board, Jairam Sampath, full-time director and CFO, Rajesh Sharma, CEO, and our investor relation partners in the call. We are pleased to share our growth as a company and achievements for the quarter. I am happy to inform you that we have been able to achieve a revenue of 5,040 million during the Q1 FY25, which represents a strong growth of 70% year on year. The operational EBITDA margin, excluding other income for the quarter 25, was at 13.3% and PAT margin was at 10.1%. Our order book surged from rupees 41,152 million in Q4 FY24 to rupees 50,386 million in Q1 FY25. Order book grew sequentially by 22% during the quarter compared to last quarter, representing substantial increase in monthly order inflow. Growth in order book is led by strong demand across all verticals, more notably industrial and EV, aerospace, outer space and strategic electronics, along with railway segment. Specifically, the aerospace, outer space and strategic medical electronics vertical, we have secured a sizable customer that will significantly increase our overall revenue portfolio in the upcoming years. From a business standpoint, we have continuously endeavored to enhance our organization and transforming into an integrated EMS company, meeting a larger portion of the needs of our clients. Our Telangana facility is almost ready and will be active very soon in order to achieve this goal in the area of smart meters. As we move ahead, in Atmanirbhar Bharat initiative by government, we are getting more on the traction in railways on board electronics, train collision avoidance system. We are making significant investment in developmental activities in this area through leading technology providers. Going forward into the future, this will further augment our valuable portfolio of business along with our other strategic initiatives by Government of India in rail safety. We are very optimistic going forward for our revenue growth, expanding into other key verticals, and will not only improve top line but augment the bottom line as well. For the financial year 2025 going ahead, we expect to have a good traction from all the different verticals, and we'll meet and exceed our estimates of 30,000 million of revenue and corresponding EBITDA margin targeting at 15% for FY25. Kaynes is constantly seeking to stay up to date with the newest technology advancements, hence eager to invest in or collaborate with such businesses. We can better serve our current customer base and attract new important clients in India and abroad by maintaining our focus on vertical competency and implementing a continuous improvement plan in quality, delivery, and automation. We are in the final stage of obtaining government approvals for our new investments and expect the approval soon. Now the new government is informed and budget is already announced. We have acquired land in the state of Gujarat, which will be starting our construction shortly. Meanwhile, we also activated the collaborations and the team formation on onboarding is happening parallelly for our OSAT business. We expect a positive response in the OSAT business in FY26. As far as our approval is concerned, it is in the final stage and is expected at any moment. Regarding the HDI printed circuit board project, we are proceeding as per plan, having set up the team. We are in the final stages of land acquisition and as indicated earlier, we expect to post revenues in printed circuit board business in FY26. We believe that as we take the final steps towards bareboard, PCB and OSAT, it will help us become a truly integrated electronics company. This is only possible because of the hard work and dedication of our entire team, and I want to take a moment to express my sincere gratitude for their contribution. I would like to sincerely thank each and every one of our excellent investors for their encouragement so far in our journey and expect continuing support in the future too. Thank you once again, and we look forward to exciting times ahead. I will now hand over the call to Jairam Sampath to take you through our financial performance. Thank you. Over to you, Jairam.
Thank you, Rameshji. Thank you all for joining the call today. And as we start the new fiscal year, I'm happy to share Kaynes Technology's financial results for the period ending Q1 2025 and share with you the highlights of the same. For the first quarter of 2025, consolidated total revenues were at 5,040 million rupees, representing a 70% year-on-year growth. The consolidated EBITDA for the quarter was 699 million INR, showing a 66% year-on-year increase. The EBITDA margin for the quarter, excluding this other income, was at about 13.3%. Our consolidated profit after tax for the quarter was INR 508 million, up by about 106%. And the PAT margin for the quarter stood at about 10.1%. Our current order book, which stands now at 50,386 million, that's about 5,038 crore Indian rupee. The net working capital at the end of the June quarter was at about 121 days, which is similar to the previous year same quarter. However, our inventories were higher on an absolute basis as we have to make advanced purchases, keeping in mind the requirements of the upcoming quarters, as we plan to execute revenues in excess of INR 30,000 million in FY25. There were temporary pressures on receivables too with a few customers. We expect this to improve in the coming quarters. We have planned the net working capital to come back to the expected lines as we progress during the year and will reduce significantly on an average by the end of the year on a year-on-year basis. Consequently, our net debt at the end of the quarter, adjusted for unutilized proceeds, was at INR 5,771 million compared to INR 972 million at the end of the June quarter of FY24. Our ROE and ROC stood at about 17.4% and 18.8% respectively for Q1 2025. We continue to make sustained progress on our expansion and continuously adding newer lines across various facilities, especially Chamarajanagar, in line with to make us a truly integrated facility for EMS. Also, our Telangana facility first phase will be up and running by the end of August 2024. In the new project areas of OSAT as well as HDI PC board manufacturing, we are likely to start posting revenues by the FY26. The requisite government approvals are expected at any time now, since the new government has taken over and the budget is presented. We will keep all posted on the key developments as we move ahead in the year. We have also received tremendous support from you all and hope to have the same kind of support going forward into the future. I would also like to thank ICICI Securities for helping us to arrange this earnings call. With this, I request all participants to comment with their questions, and I now open the floor for questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Bhumika Nair from DAM Capital. Please go ahead.
Yes, good morning, sir, and congratulations for a good set of numbers. So just wanted to first understand this, 55% acquisition in Austria. If you can just talk about what is it exactly, what are the revenues, what is the investment for this thing, if you can just elaborate a little bit about that.
Yeah, good morning, Bhumika ji. Thank you for attending this call on a Saturday. Unfortunately, we didn't have any other time to do this. Anyway, I thank all the other participants also to take time off their personal time and do this. So we have just taken a board approval for proceeding with the project, and some more details are being worked out, and at appropriate time we'll announce this details. It's going to be a significant project, but beyond that, we would come back to you once all the nitty-gritties are worked out, Bhumika ji.
Sure. So the other thing is, we saw a very strong uptick in terms of the order intake, and you said that, there was decent orders that came in from outer space, strategic medical customers, etc. Can we get some more light? I mean, is this like a multi-year contract? How large are the orders? From, some more details on this will really help us understand how things are moving and, whether this kind of order intake that we've seen in the current quarter can continue as well going ahead. So some color on this, what is the execution timeline, etc.
Sure, Bhumika ji. See, firstly, the order comes in chunks, as we have discussed earlier too. So when a large order comes in, obviously the average order inflow per month goes up a tad, much higher than what we actually execute and so on. So typically we have got in three major areas the order inflow. One is, of course, as you correctly pointed out, aerospace, outer space and defense. The second is the industrial and EV area. The third is medical area. And these are multi-year contracts. Obviously these orders, some of the orders, not all of them, but some of them exceed probably reach up to about 20 for the next 5 years too. So like, for instance, in aerospace and other areas. So, and these going forward, the order of the day will be, yes, every once in a few quarters we'll have large increases when the customers commit large amounts of business. And typically in the kind of segments that we work in, the horizon, as I have explained earlier, is longer than, let's say, 1 year and so on and so forth. So in any particular order book, I'm happy to tell you that this order book probably will suffice for our execution this year almost. There are a few more orders we're expecting. So obviously that will exceed the kind of targets that we have set for ourselves. So let's see how to manage that. So the horizon of the orders is longer and is getting increased day by day. And so that's a good news. So the order book will keep growing at similar pace. And you can expect some reasonable, after execution of all the orders, etc., you can expect some more increase in the order book at the end of the year.
So, sir, of this 5,000 crores, what is the split of a large, longer duration, multi-year kind of thing? What would be the quantum of the order book in that?
Yeah. So, no, I think the question you're asking is, are there... So we have received an order for a 2-year time frame for one of the industrial products. I'm not at liberty to tell you exactly what that product is at this point in time. But suffice it to say that this is significantly, let's say, this constitutes about 10% of the order book, where the execution is expected to be, let's say, 1 year later than today. So within next 1 year, about 10%, another 10% will get executed later than 1 year in a time frame of 2 years. So
what normally we do is, whatever we present here, we don't give you more than 2 years, but 70% of our orders we have a window period of 4 to 6 years of life. That means the contract will be either first year to 4 years. It will ramp up on the second year onwards, and then it tapers down. Otherwise, it is around 6.5 years.
Absolutely.
Understood, sir. So my second question is on the OSAT business. We're expecting approvals anytime. We've identified the land in Gujarat, etc. If you can also talk about, how is the progress of the customers, how our relationships with, Globetronics, Aptos, etc. is kind of moving on, and what is their response to some bit of a delay that we've seen? How is the work progressing with them?
Sure. So we have also used the intervening time. As you know, during the last 1 quarter plus a few months was there during the election time, etc. So we have used the intervening time to strengthen our relationship with the collaborators and also do a little more in terms of augmenting the team with CTOs, operations heads, and so on and so forth. We also got some more customers in the advanced packaging area. So the idea is to make sure that we use all the time to develop a good business portfolio in this area, so that once the machines are in place, we do get a good quality of business too. So it's been used by the team. This intervening time period has been used by the team to augment their relationship with the customers, etc. And that part of it is going well. And as expected, and I think FY26 end quarter, that is the fourth quarter of FY26, we certainly will have reasonable and reasonably significant capacity utilization and revenues.
Okay, sir. I'll have more questions. I'll come back in the question queue. Thank you so much.
Thank you, Bhumitaji.
Thank you. Our next question is from the line of Ravi Swaminathan from Avendus Spark. Please go ahead, sir.
Hi, sir. Thanks a lot for taking my question, and congrats on a very good set of numbers once again. My first question is with respect to the industrial segment. Just wanted to get a sense as to how the mix is there in the industrial business with respect to smart meters and other products, and what kind of growth that we can think of with respect to this particular category over the next 2 to 3 years. Where does visibility come from in terms of growth across various sub-product categories in this space?
Thank you, Ravi, for joining the call, and this very important question that you have asked. So, see, industrial sector is right now happening sector due to certain products. Industrial and EV, if you take lots of happening orders are there. One, of course, is smart meter, both domestic business as well as international business. So we have some excellent clients acquired in both the areas. And currently, what we have posted as order is for the domestic segment, but we are also likely to get some export orders in this area, which is significant in nature. So over the next, let's say 2 to 5 year time frame, we expect probably a tad higher or almost similar growth rate as the company's level. As an overall thing, I would say that all the verticals seem to be growing similarly to the company's number. Obviously, industrial maybe grows a little higher, and something else may be trailing a little bit, but we are broadly at the same level of growth rate. So we see the same bullishness across the categories, all the different vertical categories. So that's why we get a confidence that we will be able to kind of manage the portfolio profitability properly. So what happens in each, as you know, as the quarters go from first to second, third, and fourth, the amount of sales that is done is also like in a ratio of 1 to 3, 4 kind of number based on last several years study. And so there would be in some quarters, some orders will get onboarded and so on. So that sector may look a little higher in terms of, execution and all that. But broadly, like last year's numbers, similar percentages we expect in effect. Maybe a little more exports we can probably factor by the end of the year.
Understood, sir. And my second question is with respect to the medical equipment business. So that particular segment had been a bit of soft over the past couple of years in terms of growth, and this quarter you had talked about one contract coming from the medical side. Even competitors like Sirma, etc., they hadn't reported good numbers beyond the point after acquiring the one company. So why is it that this particular segment is not growing as fast as the other segments? We understand that I think it carries better margins, etc. How's the outlook for this particular category?
Yeah. So while I cannot really comment on businesses of other companies, obviously they are working with some strategy which I am not really privy to. But as a generic comment, our increase in order book in medical area is for exports. And we know it's a difficult area to work because we have been in this sector for more than 2 decades. And so it takes a long time for reputation to build and people to test, try you with newer orders. But I'm very happy to tell you that one of the world's leading medical equipment providers has qualified us both in Europe as well as in the US business. So we can expect now that to pull up the percentage of medical business. But on the other hand, I would also like to point out that these are extremely high-tech and high-critical and highly complex equipment. And so it's not very easy to ramp up these businesses. The customers do take a long time before they finalize. So we are happy to tell you that we have now onboarded a very large customer. So I think for some time we will start growing the business and delivering to that customer's requirement.
Understood, sir. Thanks a lot, and once again, congrats on a very good set of numbers. Yeah.
Thank you, Ravi. Thank you.
Thank you. Ladies and gentlemen, a reminder to all participants, please limit your question to 2 per participant. Should have a follow-up question, we request you to rejoin the queue. Our next question is from the line of Deepak Krishnan from Kotak Institutional Equities. Please go ahead, sir.
Hi, sir. I hope I am audible. I just wanted to sort of understand, we've given a guidance of 15% for EBITDA margin and, 1Q we are sort of flat on flat. Is this a large part of increase driven by, ramp up in aerospace, medical and those segments? Because at the beginning of the year, you had indicated that these segments, the percentage share may go up by 200, 300 basis points in the overall mix. Is that understanding correct? Is it leverage and mix that will sort of get us to 15% EBITDA margin by year end?
Yes, that understanding is correct. The mix, especially in industrial, as well as the aerospace, outer space and strategic electronics, that will also drive more margins positively. Of course, we don't really talk about margins by sector, but yeah, the mix will favorably change is what we expect. And this is based on our understanding of already orders that we have received.
Sure, sir. And maybe just wanted to sort of understand, I think, Mr. Kannan also sort of indicated something on the cover system as well as the progress over there. In terms of our end customer, is this RDSO approval already there in place? And in terms of execution, when are we sort of expecting covers to pick up? Do we have anything in orders already, or we sort of expect that to come through? Maybe just one final point, it's expected, how much of the overall cover spend is the content that you kind of contribute? Because it's expected that the overall cover system is about 5 million per kilometer, route kilometer. So how much of that is, what Kaynes does?
Regarding coverage, we are only investing in anticipation of order. India is going to have huge numbers. And our relationship with the Tier 1 rail suppliers are also good. So we feel we can get into this business. Using that and keeping that in mind, we are investing this. We will be investing around 40 crores in R&D investment into this project. Proof of concept is what we are being done now, and this should be in the market by first quarter of 26.
Sure, sir. Those are all my questions, and best of luck for future projects.
Yeah. Thank you.
Thank you. Our next question is from the line of Rahul Garje from Health Securities. Please go ahead, sir.
Thanks for the opportunity, and congratulations for yet another strong quarter. Now, I think my question is continuing with the earlier question on the margin. Now, I did see that the industrial and auto had materially increased in the first quarter. Also, the share of box build was lower. So I wanted to understand specific reason for why the margin was slightly lower in the first quarter. And also the blended margin of the order book that you have, that will be helpful. Also, the existing order book of over 5,000 crores, how much of that is coming from box build and export? I think that's the first question.
Rahulji, thank you. So you see the first quarter, if you notice, it is almost quote unquote an election quarter actually. And we are glad that we got to where we actually reached, because obviously order book is there, but still the uptake of some of the products which end customer is people like railways and other governmental agencies, the inspection was not being done and so on and so forth. So employees were on election duty and all that. The whole system kind of comes to a standstill on the government side. So that was one reason. So there is a mixed variance, obviously. And within these sectors also, like for instance, within the different verticals, there is different margin. Some are higher, some are lower. So within the verticals also, there are some products that are higher margin and lower margin. So it so happened that the orders that we executed were of those where margins were a tad lower. But we have done, the operating team has done an excellent cost control job to make sure that we kind of did some austerity measures to make sure that our EBITDA was still maintained. Going forward, the leverage will be available better because, as you know, the sales will increase. First quarter generally represents 15-16% of the total year. Second quarter will be 25%. So you will start getting some good leverage going forward. And I think so. One is the better mix, which will drive gross margin, and then better leverage, which will drive even better EBITDA. So we are confident that this is a transient phenomenon. And so we think that we'll be past this by second quarter end. At least we'll definitely be better off.
And box build and export share in the book?
Yeah. So the box build, for instance, if you take medical electronics, for instance, the new orders are coming in box build. So box build is a little longer term in terms of development and approvals and all that. So you can see some increase in box build by end of the year, especially in certain industrial as well as medical. We are going to have more share of box build. By end of the year, you will have box build share going up, and as rightly pointed out, it drives also the margins a little higher.
So my second question is, actually, the export also, maybe you could just touch upon how much was export in the order book. And, given that, we are probably in the final leg of, the OSAT approvals, etc. I want to understand, how many people will you need to run this operation at peak? And, do you see issue of, skilled manpower?
Sure. So firstly, on the export order book, see, typically, currently, the export portion is exactly similar to what we actually do, which is around 15% kind of